Today's topic of discussion is one of my favorites, and that is cash flow. When you think about it, everything revolves around cash flow. Cash flow can make or break the success of a business. Cash flow can make you feel a lot of different emotions when it comes to your personal financial situation. So, what is cash flow? Well, essentially, it's the money that's coming in versus the money that's going out. Now, whether you're retired or not, most people have income streams. Whether that's a salary, a pension, Social Security, investment income, rental income, or something else, that's the money that's coming in as inflows. The things you spend your money on, or expenses, are the outflows. So let me ask you a question. Are you cash flow positive, neutral, or negative? Cash flow positive would mean that the money that's coming in as income is greater than the money you're spending on your expenses. So for example, most people work for an employer with a retirement plan, like a 401k. They're contributing to that 401k through their paycheck, and after that contribution and taxes, you have a net number that hits your bank account. So if you're looking at your bank account on a monthly basis and you see it continuously growing, you're probably cash flow positive. It takes a very disciplined person to remain cash flow positive over longer periods of time. The next would be cash flow neutral. This is when the money coming in as income and the money going out as expenses basically wash each other out. So if you're looking at your bank account statements on a monthly basis, they're probably staying pretty level. The last would be cash flow negative. Now, as you could assume, this would be when the money coming in as income is less than the money going out as expenses. People in this type of situation usually turn to debt or lower their liquidity over time. Now, cash flow is not a static situation. It's usually always changing. Some months you may make more money. Some months you may spend more money, or vice versa. Therefore, your situation might be changing frequently from positive to negative to neutral during certain months. Holidays, vacations, birthdays are prime examples of something like this. Now, most of the people we sit with throughout the year don't have a personal budget. Now really, who wants to budget? It's basically a sheet that tells you what you can and cannot spend on a monthly basis. Some people come in and have these very detailed budget spreadsheets with specific line items saying exactly where the money's coming from and where the money's going out. If you don't have a budget sheet like that, don't be upset. Most people don't want to spend the time to compile the numbers. Also, depending on your situation, it might not be necessary. We believe in understanding cash flow from a high level or holistic point of view, and it's something that can be easily accomplished. Budgeting is great if you're a very detailed person or want to find a specific area of spending where you want to lower. However, if you have positive cash flow and you're spending your money on all the things you want to spend money on and still remain positive in cash flow, a budget might not be necessary. If you do want to understand your cash flow situation a little better, one of the best and easiest ways to do so is by looking at your bank statements. Most people have one bank account where all the money come in as income and all the money going out as expenses are going in and out of. Now, if you look at the first page of your bank statement, there's a summary report of the inflows and the outflows of the account. If you look at this and analyze it over a month-to-month basis for a few months, you might get a little better understanding of your situation. Also, you can total up all the inflows over a given year and see what you spend on an annual basis. Then, you can start analyzing your spending trends and really diving into your situation. We typically like to look to 2 to 3 years worth of someone's bank statements to fully understand their situation. Now remember, as your income grows, your expenses might grow too. So looking at this and analyzing your statements and your spending trends might be really useful long term. Understanding your cash flow situation is vital when you're setting goals and you're doing financial planning. Now, if you don't really fully understand your cash flow situation and you want help doing so, reach out to us and we'll help you. In retirement, when the paycheck stops, and you have to finally start taking money out of your investment accounts and supplementing that lifestyle, it's vital to understand your cash flow situation. Also, cash flow is a key factor in understanding how to align and dictate your investments when you're planning long term. Thank you.